Well, thanks for attending this broadcast. I'm Tom Perrone, and you're attending the Building and Protecting Your Business Worth broadcast. And today we're going to talk about the buy and sell agreement and the essentials. And we're going to get through this in about 20 minutes. So I'm going to ask you that if you have questions, I'm going to give you an email address, and please send me your questions, and I'd be more than happy to answer them, and I promise that I will. You'll learn a lot today, but today we're really going to talk about the continuation, the essentials, and the steps you need to take to secure the continuation of the business should death, disability, or voluntary or non-voluntary removal. And we're going to talk about the upside of it and the downside of buy and sell agreements. So again, keep your questions based on an email to me, tperrone at necgginc, and I will promise you that I will get back to you and answer as best as I can, and we'll get back to all of you. Now, today we are sponsored by Virtual Support Gal. Liz Hill, who's got a great firm, and she picks up all those things that we need help in, those back office arrangements, the things from social media, supporting the website. She keeps the business running day to day, tasks, spam, moderation, subscription help, safe passwords management, all those little things that nobody wants to do, or a lot of our staff don't know what to do. So she fills the void there, and we use Liz, and she works with a lot of our clients. They're all happy with her, but you can reach her at Liz at virtualsupportgal.com, and her website is virtualsupportgal.com. 203-362-7882. You need that number, you can email me. I'll get it to you. Okay, the introduction. Basically, here's where we are for the essential part of it. We're really discussing what happens if a partner dies, becomes disabled, retires, departs from the business some way. What happens to those shares? It's an very often overlooked agreement by advisors and the owners because it's probably something they don't want to talk about. It's a little complicated because you have to have a discussion with your partners as to what's going to go on, all these little elements of it. But what it really is, it's a referee that really spells out the rules. What happens if a partner leaves the firm by any of those triggers? Okay? And my friend Paul Hood has a great way of doing it. He says, hey, run the fire drill. What's going to happen if tomorrow morning your partner is dead or decides to leave? What's going to be happening to those shares? And when you start running your own fire drill, you'll realize how important this is for your firm for a lot of different reasons. And, without it, you could end up with costly litigation, chaos, interruption, things of that nature. So what is it? It's a binding agreement. And it's one of these agreements that's probably the most important agreement that you're going to make in your company. But it does ensure smooth ownership and transition, and it protects everybody, all the parties financially, because when the buy and sell agreement is done, the partners are alive. They have nothing to gain, nothing to lose, because none of them have left or died or whatever. So they're equal in their discussion. There's no hidden agenda, because they know they're thinking that I'm not going to be the first one to die. I might be the survivor. On the other hand, if they're thinking that they might be the first to die, they want to protect their family too. So I'm running into a case particularly that's very interesting. Long story short, the buy and sell agreement is very old, and it calls for the company to redeem the stock of the second generation owner. The problem is the first generation owner is getting a big payment for the next number of years and a balloon payment of $1 million. And if the second generation, the son, dies and they try to redeem the way they wrote it, It's basically they've got to pay this money over 5 years at the prime rate. Well, if they do that, they're going to have to increase their sales by $10 million. And that's like, 200% more than they're doing now. So it obviously not going to work, but it is a legal binding agreement that should be looked at every year. Well, why you need the buy and sell agreement is it really prevents uncertainty in ownership. In other words, something happens, there's no agreement, now the fighting starts. Legal disputes, a lot of money costs, legal, the whole deal, how are we going to pay for it? And I always look at it this way. What would happen if your partner dies and left their stock or their ownership to their surviving spouse? What would that look like? What would it look like if the surviving spouse hired her attorney to run proxy for you because she owns the stock? How does that look in your company? Does it work out? Well, these are the things that a buy and sell agreement helps avoid. So there's a few different types of buy and sell agreements. There's a cross purchase, which is owned by two partners on each other. That's a simple one. It has some good tax advantages to it and a stepped-up cost basis. You have entity purchase, which is where the stock is redeemed by the company. You have the wait and see buy and sell, where some companies are not sure where they're going to be financially, so they set it up so that they can go either way after the fact. And it works pretty well. It's been around a long time. The trust deed buy and sell is designed really to limit the amount of insurance policies that would be needed to fund a death. And because if you have two partners, that's one thing. But if you have three partners, now all of a sudden you need 6 policies. If you have, it gets crazy. Let's put it that way. So buy and sell agreement where it's cross purchase works, except that you have to be careful how it's set up. One of the things that I like is I like the insurance LLC buy and sell. Each owner is the insured, and it works like a cross purchase, and you don't run afoul of what they call the transfer for value, which could be a tax trap. And then you have the endorsement buy and sell agreement between the owners. And these all have particular reasons why you would look at it, but when we work on a buy and sell agreement for a company, we take a look at these particular setups to see how they're going to work with the company. Now, the funding, I look at funding. That's one of the big things that I notice they don't spend a lot of time on, and they should. Because when you look at the funding of buying stock, you have really 4 ways of doing it. You have personal savings, which now cost 100 cents plus the interest and lost opportunity cost. You have loans where you go to the bank to borrow the money to buy your partner, but now you got to pay the interest. The question becomes also, will the bank loan you the money? You just lost a partner. How is it going to affect the company? Some bankers might be a little shy about that. Then you have business earnings. Well, we're going to use our business earnings in the cash flow. Well, that's good, but you tie up your earnings, plus it's costing you the investment part of those earnings where you can be buying inventory, rolling inventory. And then you have life and disability. And when you take a look at it, life and disability plans run 2 to 4%, and they're a fraction of the first 3 funding vehicles. And again, we run the analysis for our clients so they can see it. So I put a couple of notes here. How much more gross sales do you need to make up the difference to buy your partner? For example, if you needed $100,000 more per year for 10 years, the impact on new sales needed to net $1 million, $100,000 a year, you'd need 10 million. Let's say we were using 10% net profit. You'd need $10 million more in sales to net $1 million, as an example, right? Each company is different. So compare the sales to the current sales. That'll give you an idea. So the insurance solutions, life and disability, provide the immediate liquidity. And the types of life insurance, well, it depends on the cash flow of the company, the longevity. In other words, how long are we going to keep this? You have two young guys and the business goes a long time. You want to make sure you don't run out of insurance. The health and the age of owners. The long-term goals of the business. And of course, we want balance sheet friendly type insurance so that if we're going to pay something, we don't want to charge against earnings that's large and doesn't look so good. But we want the most cost effective so that if we need this insurance much longer than a certain period, we want to make sure that it's cost effective and not just a pure cost. So you have permanent life insurance, which is universal life, indexed universal life, or whole life, and then you have term insurance, which is a rental of the insurance. And again, each case is so different, and we do analyze it with our clients. So who are we, New England Consulting Group? Well, first of all, we have been around 55 years. Wow, that's a long time. And we have spent pretty much all our careers working with business owners. We consult with them in the areas of estate planning, executive compensation, transition, and business planning. We do advanced planning. We have a heck of a legal resource because I have to my disposal not only my own tax attorney firms, but the company's tax attorneys, which don't charge me anything. So I can call them about a case, talk about your situation, have your valuation analyzed, do a lot of things that you would have to pay an awful lot of money for. So we have the capability to have ongoing guidance for our clients in that area. We're a big believer in frequent reviews, and I want to tell you, I suggest very, very strongly that you have business reviews annually. You could have ownership change, the revenue might change, tax laws do change. We just saw the new bill. It's changed a lot of things, a lot of great opportunities. Everybody should be going through a review. And of course, you have insurance changes and updates and, of course, valuations. So we have an automatic review system that goes out automatically for all our clients. It's basically a very simple review that puts them in a situation where they can put together some notes on a couple of pieces of paper and questions that we ask, and we can have a review probably within a half hour to an hour. We normally do it on a Zoom, or I'll record the review, and we can save business owners a lot of time so they can review the video on their own. And I just want to say as a disclaimer, attorneys write buy and sell agreements. They draft those documents. We don't do that. We can help you with the type of arrangements we've seen and feed the attorney some ideas because we know a little bit more about you than they do in some cases. So again, if you have any questions, I want you to email tperrone at necgginc, and we'll certainly get back to you right away. And I do want to again thank Liz Hill, virtual support gal, for her sponsorship of this broadcast today. Also, last thing, I wrote a book about 5 years ago, Unlocking Your Business DNA. You can get it at Amazon. It's paperback or Kindle. And any profits, these are not expensive books, but any profits do go to veterans groups, which I support. And if you can't afford the $3 or you don't like Kindle and you don't like, I'm kidding, of course, but you can email me and I'll send you an e-copy. But thank you for taking the time on this broadcast to learn more about buy and sell agreements and Essential. Feel free to email me at any time. Thank you.